It is Thursday, June the 15th, and will they or will they not was answered yesterday.
And they will, but it's going to wait. It's not a pause.
They didn't yesterday.
It's not a pause. It's a skip. There's a difference. Pause indicates maybe they aren't going to do it anymore. A skip is they're going to do it, and he pretty well said we're going to increase interest rates.
78% chance, according to those who do this sort of study, for an increase in July.
Right, and we're talking about the Federal Reserve and what Jerome Powell did yesterday, and the market's reaction to that. I think the surprise that. And it's baffling why it is a surprise. But the surprise was that the group, the committee that is voting, having the voting rights to this, is actually leaning not only to one increase, but probably two increase. And there is a part of that wants more than that. They want to go where Jamie Dimon said they're going to go 3 weeks ago to 6%, which would be a almost 0.75%
which kind of takes us into Jamie Dimon, J.P. Morgan, and they're on one side of the equation, and then you've got Goldman Sachs, and you've got BlackRock on the other. Those two are whistling through the graveyard, saying that we're going to have a soft landing. We're not even going to have a recession. And then you've got Jamie Dimon, who's saying this is going to be really difficult when this recession hits, and it's going to be next year, and it's going to be at least 13 months, and it's probably going to be longer than that, and there's no soft landing. So who's right and who's wrong?
You don't know. What you also have is that the NASDAQ has been the big winner so far this year, but as Gib pointed out in our show here a little bit ago, it's just way overpriced. The S&P is overpriced. It's ahead of itself. We're looking at that, though, that if we do have this pullback, we both have mentioned we have a list of technology companies that
and dividend oriented
so mixture companies that we would say a pullback might be a opportunity to nibble in and buy in, but not jump full into the deep end, but slowly move into the deep end. But I would say the consensus of you folks that we talk to on a daily basis and we here is to say let's steady as you go. Get me 5% or better. Let's get into the summer. Let's see where the Federal Reserve is going to go, and just keep me safe, sound, liquid, and give me opportunities, and let's have a conversation.
Yeah, and that 5% is what you were alluding to is what we're able to get currently on Treasury bills.
Right.
It may not be the entire return of your entire portfolio, but that 5% on the safe pieces has been something we've been blessed with through the last year for sure.
All right, so we're going into the summer, almost halfway through June. Trips are coming up, vacations are going to the pool, and then this Sunday is Father's Day. So congratulations to all you dads and granddads out there for being great fathers. And so we wish you a happy Father's Day, and we'll stay in touch. We'll continue working as hard as we do because it is your money.
And your money matters. Have a great week, rest of the week and weekend, everyone.
See you next week.